Okay, welcome to the first quarter FY20 results for Kotak Mahindra Bank, both standalone and consolidated. We just declared the results just a while ago, actually. We closed the first quarter at the bank standalone with a post-tax profit of 1360 crores, which is about a 33% higher than what we declared the same period last year. We have a NII growth of about 23% on the back of advances growth, which is about 18%. Our NIM for this quarter at the bank standalone at 4.49. Advances, as I said, grow at about 18% year on year. On a year-on-year basis, we've seen most of the segments of which are comprising the advances have grown. The commercial bank, the consumer bank. The corporate bank has had a slower growth at about 7.5% to 8% on a year-on-year basis, but the rest of the book has grown pretty well. Capital adequacy, again, we continue to be remaining pretty healthy with a Tier 1 at 17.3 and an overall CAPAD of 17.8%. CASA continuing to be pretty healthy. We are at 50.7% of CASA at the end of June. We've seen our average current accounts grow at 23% on a year-on-year basis, as well as the savings account doing an average growth of 21% on a year-on-year basis. Our big focus has been on lower cost deposits, including the lower ticket sizes. TDs below 1 crore have seen a 25% rise on a year-on-year basis. In addition to the CASA of 50.7%, the TD sweeps constitute about 7% as the total, as percentage to the total deposits. Our ROA at the bank level at about 1.8%. We've seen advances growth at 18%. The GNPA at the bank standalone level at 2.19%, with the NNPA at 0.73. At the consolidated level, we closed this quarter at a number of 1932 crores as a post-tax profit, about 23% higher than the same period last year. Apart from the bank, major contributors to the profits at the consolidated level were Kotak Prime at 153 crores, Kotak Life Insurance at 134 crores, the securities company, which is a brokerage company, got 110 crores. The mutual fund, including the trustee company, clocked 73 crores, and the investment company had a 63 crore profit. The broking company does not include the investment bank, which is about 45 crores. CAPAD, again, at the overall level, remaining pretty healthy at 17.9%, Tier 1. Kotak Life has had the premiums, which is the new business premiums, have grown 42% on a year-on-year basis. Kotak Securities, the cash market share at about 10% for the quarter. Our assets under management across the group, which includes the domestic mutual fund, the alternate assets, what we manage overseas, have grown about 19% on a year-on-year basis, and we're now at about 2,37,000 crores. The relationship value of wealth and priority customers, we are now at about 2,80,000 crores. The growth of advances at the consolidated level has been slightly slower, as against 18% in the bank. Consolidated level has been about 15%, on the back of the fact that auto loans have actually had a negative growth both on a year-on-year and on a quarter-on-quarter basis. Both at the GNP and NNPA levels, at the consolidated level again at 2.02 and 0.71, which are lower than the same period last year. That's broadly the highlights for this quarter. Should be fine to take questions.
There is an auto segment and there is a customer who takes an auto loan. The customer is not necessarily distressed. Yeah? You and I will still keep paying our EMIs. It's not that you and I will stop paying our EMIs, really. So there may be a slowdown in demand, but that doesn't necessarily impact an existing stock of loans, really. So the impact on loans which you already have may not be much, really. It probably impacts growth.
Slowdown in auto loans is primarily coming from the vendor side, the production side?
All. It's a whole chain. It's probably one of the longest manufacturing chains that you can see, customer.
But like you're saying that there may not be a slowdown in demand. Consumer may be...
No, demand slowdown will be there. That won't affect repayment capacity. So I and you will not stop paying our EMIs. So you may not see defaults really, but you will see much slower uptake of loans. That's the difference. So less cars get sold.
What you're being watchful of right now under auto? The consumer side or the production side?
No, it impacts everything really. Yeah, but and it's a long chain, so you have to be careful about all parts of the chain really, right from vendors, suppliers, auto manufacturers, dealers, and then customers. All of that really. So the entire chain over a period of time. That Jamin mentioned really. Yeah.
So the GNPAs haven't grown much. I mean, have grown by a marginal amount, including the slippages. So we've had recoveries. Recoveries are upgradation, whatever you call it. So that's been in the general trend. So it's not been large. It has been okay.
Our gross NPAs moved only very marginally. Yeah.
So the commentary among your peers is the slowdown in demand. There have been some who said that probably asset quality is best to.
Generally, most of agri, at least secured agri, I don't think there is any significant change in stress levels.
Even the agri loans, loan book is degrown, right?
It's not degrown. It's about the same because agri has multiple parts really. So it's agri per se. You have tractors which go into agri. You have agri SME, which again is agri. So overall, I think the stress levels are okay. Yeah, they're not unusual really at this stage really.
Any particular segment where you are seeing, higher levels of stress, which you would say kind of unusual?
In agri?
No, across.
So it's difficult to say in pockets like that. It is just now the stress levels are universally elevated really. Yeah. So it's tough to say which specific one will be in more trouble than others. But some of them are looking like the future may be more stressful, like auto we said, all of these. So that's how it is.
Right. So just to get an overall commentary for the rest of this year, I mean, a lot of your peers have said that going ahead, the outlook remains challenging. Just wanted to get your sense on it, on how concerned are you about the economic environment right now?
I think the outlook does remain challenging. However, if you look at the marketplace, everything in the marketplace around is not in trouble. Yeah, there are pockets which are doing very well, and you just have to reach out to those pockets really. There are pockets which are not doing very well. For those pockets, you still have to reach out to those pockets. You have to keep your risk return, appropriately in place. You cannot be mispricing in those segments because the worst thing is, you price at a very thin margin in a relatively riskier segment. So if you keep these two broad principles in place, I think there is still opportunity. Yeah.
Any guidance on credit costs?
I think around the same levels. We've been in the 50-60 range.
This time, I mean, if you look at this quarter, annualized which we are at about 52, so it should be in that range.
No, the amendments are more on the resolution side, which are good because I think some of the parts of the processes were were slowing down very significantly, really. So some of these will help in resolution rather than in liquidation. Yeah. We suddenly had got into a phase where either it had slowed down or it was getting liquidated, really. There was very little of resolution happening. I think we have to see it move from slowdown to resolution rather than slow down to liquidation. So hopefully resolution will be faster. So that's the resolution place. In terms of buying out opportunities really happen much before it gets into an IBC, because once it gets into an IBC, you have to wait for resolution to happen. Yeah, only then do you get an appropriate price. But a lot more opportunity even before IBC process starts. See, LRD is a very different marketplace. LRD is not really developer. It's ultimately funding against a cash flow. Yeah, so it's not strictly a developer piece. So against cash flow, the risks are very different. Yeah, it's not like lending to a developer against land or against construction. Against land or construction, the cash flow is unknown technically, or very, very, very unpredictable. So that's a different exposure. But pure developer, we've always been very cautious. The developer book, yes, it is. I think it's a tough business model, and it requires a certain amount of holding capacity and a certain amount of patience and a certain sharpening of the business model. Yeah, you necessarily go through a process of first customer acquisition, which means that you invest a lot of money, and then the revenues come later on. Now, that means that for 3, 4, 5 years, you're only spending money with very limited revenue visibility, in the hope that after 4 or 5 years, once you build up a decent customer base, your revenues will start coming to match your investment. So it's also a game of patience. Yeah, you got to wait for those 4 or 5 years for customers to improve your cross-sell and other things. So if your visibility or your appetite is not that much, then it's better to wind down rather than run with it.
How is your experience data? We don't have data for payments time other than the 2018 RBI report which showed that there were 2 consecutive years of losses.
So there is customer build-up, and customer build-up is expensive, and the revenue visibility takes time. The revenue visibility in the beginning is largely money transfer, but you cannot build a payment business just on money transfer. You necessarily need other revenue streams, and that takes time to build up. Yeah, you need to provide reason for the customer to buy more than just a single product from you. But the customer build-up is happening. But to sustain that customer build-up, you need to keep offering more and more products and services. That requires further investment. So unless you are willing to invest for those 3 to 5 years, and it is an increasing burn, for you to see the benefit of that after that 5 years.
You are willing to invest for a few more years to see how this pans out, or would you be considering other options?
See, that's a JV. We have our share of it. It's run by Airtel, really. So we are basically a silent partner providing whatever inputs we have.
Any more questions, or we can break for tea and can catch up over high tea?
Yeah. Thank you.
Thank you, friends.
Thank you.
Please join us for high tea on the first floor. Mr. Gupta and Mr. Bhatt will be available. Sure, please.